There are many questions to be answered and decisions that need to be made in the world of stock trading. These questions and decisions must be answered and made objectively, with consistency, if we want to have a successful trading career. The system provides the answers to these questions, making the decision-making process much simpler. So what is the system? The system is an objectively defined, well-thought-out, profitable trading strategy. The system aims to answer very specific, important questions, some of which include, but are not limited to, how do we make the up and down tracking of price simpler and easier on the eyes? What makes this trading day different from the last? What makes this bar dissimilar to the prior bars? How do we know if this day is the day to enter? Is this bar strong or weak, and is it stronger or weaker than the last? How do we know when price is more likely to turn? Where do we get into a trade? Where do we place the stop? How much risk is there in taking this trade? How did we even locate this potential opportunity in the first place? Let's examine this current chart here. First, what we see is a plain old daily bar chart. This means that each bar on the chart represents one full day of trading. In looking at this chart, what gives one the indication that this is an opportunity to buy this stock? Maybe one says price is making a higher high and higher low pattern, trading up to $12.23 on August 1st, and is now pulling back to test the high made at $10.61 on July 1st. One may also say that price, when pulling back, is holding the halfway point of the upswing, which is an indication of strength. But with removing these lines, how visible is all of this? Is what was just discussed enough to buy this stock? And if it truly is, at what price do we buy it? So let's jump in real quick and build out the system, showing how it can improve our evaluating, tracking, trading, and scanning of stocks. 6 specific trading indicators will be used in the system to obtain precise feedback from the market. The indicators used in this system are the CT trend, CT score, CT count, CT trigger, CT swing, and CT average. These specific indicators will present certain information that can be utilized in tracking price, quantifying strength and weakness, quantifying the flow of trading waves, plotting specific entry and stop points, and providing information about volatility. First, the CT trend indicator. What this indicator does is it colors the trading bars, either black for up or red for down, based on specific 2-day bar patterns. This allows for an easier comparison of up versus down moves, allowing for a simpler creation of trading waves. If one is looking to enter a trade off of a pullback in price, then when using the CT trend, one would want to enter when price moves from red to black, as seen here. The next indicator to help in the decision-making process is the CT score indicator. To differentiate means to recognize or ascertain what makes something different. The CT score indicator answers some of the questions discussed earlier, some of which were, what makes this trading day different from the last? How does one know if this day is the day to enter? How does one differentiate a strong from a weak day? How can one quantifiably track all of the movements of price in a consistent, systematic manner? The CT score indicator, as the name suggests, scores the action of an individual trading day with a positive or negative value ranging from +7 to -7. This scoring provides information on the strength or weakness of the day based on the sign and value calculated. The calculation is based on the summation of 6 different actions of price. These actions include the bar pattern, the bar range, volume, the current day's close in relation to the current day's midpoint, the current close in relation to the prior day's close, and the current day's close in relation to the CT trigger values. In loading the CT score indicator, what can be observed with this indicator versus without? What we can see here is that as price moves lower throughout the pullback, the scores of the day are actually increasing. This divergence is telling us that as price is moving lower, it is actually gaining strength. We would want to buy pullbacks as to not overpay for the stock of interest, but we would also want to buy a stock that is strengthening. The application of the CT score indicator provides us with valuable information versus the plain bar chart. Another indicator that helps create our trading environment is the CT count indicator. The CT count indicator was built on a similar premise to counting cards in blackjack. Counting cards can be broken down into 3 steps. First, assign a value to every card. Second, keep a running count based off the values of the card dealt. Third, change the betting as the count rises and falls. The purpose of counting is to know when the house edge flips in favor of the player. In counting cards, each card is assigned a value. In our system, each bar, or trading day, is assigned a value as well. This value comes from the CT score indicator. You can then think of each bar on the chart as its own individual card in the deck. We know these values range from +7 to -7. What the CT count does is it keeps a rolling sum of these scores with the purpose of providing a more well-defined, quantitative sense of the flow of price. What can be seen in the CT count is that since July 22nd, the count has been above 0, which is an indication that the edge has flipped to the long side of the market. As price continues to trade higher, the count remains above 0, and even when the price begins to move lower throughout the pullback, the count still remains above 0. This indicator is used to help judge the strength and weakness in the market and whether the bulls or the bears currently have the edge. In this case, the bulls. We now have many signs that the market is pulling back while remaining strong. So then the next questions are, where do we get into this trade? Where do we place the stop? How much risk is there in taking this trade? The CT trigger indicator is used to show potential entry price, initial stop loss, and defines the risk in taking the trade. The indicator is comprised of an up trigger and a down trigger. The up trigger is plotted at a point above the prior bar's high, and the down trigger is plotted at a point below the prior bar's low. The range between the up trigger and the down trigger defines the risk. The CT trigger helps us prepare our trade in advance, as the levels for tomorrow can be calculated at the end of the current trading day. This eliminates the question of where do we get in, where do we place the stop, and how much is our risk. We can see here that on August 8th, the long trade was triggered as price touched the $10.85 price level, which was the up trigger price. The stop loss for this trade is then placed at $10.32, making the risk on this trade approximately 4.8% of the investment. One may be wondering why an entry was not taken on any of the other red bars during this pullback. This indicator answers that question as well. We can turn on all of the trigger prices for every day and see that as price moved lower, it never touched any of the preceding up trigger prices. This prevents us from getting into the trade prematurely, as touching the up trigger price gives us that red to black move we've been looking for, sweeping us into the long trade as price begins to rise again. Finally, how did we locate this opportunity in the first place? 3 indicators aid in the scanning process, one of which we've discussed already, the CT trigger indicator, and 2 we have not, those being the CT swing and CT average. Since the CT trigger indicator provides us with the risk for our potential trade a day in advance, we can scan for stocks that fit our level of risk ahead of time. This means we will only trade stocks that fit the desired level of risk based on the size of the trading account. The CT swing indicator provides us with information about a stock's volatility by calculating an average swing size for that particular stock. If stock A's average swing is 9%, while stock B's average swing is 16%, and both stocks currently allow for a risk percentage of 4.8%, then it is wiser to look for opportunities in stock B due to the fact that that stock is providing a better risk-to-reward ratio. We can then use the CT trigger indicator to scan for our set risk size and the CT swing indicator to scan for stocks that are more volatile to filter out stocks that just don't move and track only the stocks that might offer the greatest profit potential. The CT average indicator is used like the CT swing indicator in the scanning process. This indicator is simply a moving average of the closing price of the trading days. This indicator is used to scan for the slope of a potential trading wave. We want to enter a trade in the direction of a new potential wave. If the slope of this indicator is up, we would be looking for a long trade, and if the slope of this indicator is down, we would be looking for a short trade. Also, this indicator helps us locate a proper entry point into that potential wave. For a long trade, we would want to see the up trigger be above the CT average, and for a short trade, we would want to see the down trigger be below the CT average. If one was to plot this indicator, it would be colored black if sloping up and red if sloping down. When we remove these indicators and re-examine the plain bar chart, can you see the benefit of the system? The system indicators are also accompanied with an over 400-page e-textbook written for the trader, providing all of the tools and market knowledge necessary to be studied with the intent of not only following along with the Christopher Trades website, but also becoming an independent, consistently profitable trader. Learn a set of rules with detailed explanations that make consistent profits. Here's a view of the topics discussed in the book. Thanks for watching this video and taking a little bit of time to learn a bit more about the system.